Hello. Today at Finextra at Sibos, I've gathered the panel from the Accenture Innovation Forum that was held this morning on day 3 of Sibos. So before we start in with our questions looking at innovation and payments, I'm going to let the panel introduce themselves.
I'm AP Hota. I'm MD and CEO of National Payments Corporation of India. It is a newly set up umbrella institution or a national payments utility in India.
I'm Alice Zanza from the Payment Systems Development Group within the World Bank.
I'm Ian Hooper, Accenture's Payments Lead in Asia Pacific.
Good morning, I'm David Yates. I'm Chief Executive of VocaLink, which is the UK National Clearing Systems operator.
So how I'm going to start this discussion is I think, any conversation about innovation in banking, I think can be really narrowed down to a discussion about payments, because payments is kind of the core of banking. Everyone wants to get transact and get money for purchases. So I want to start off with maybe I'll start with you, David. This word innovation gets bandied about constantly. What exactly would you consider payments innovation?
Well, I think payments innovation really is something that needs to take account of the context in which it's happening. So there is a starting point, which is all of the existing payment structures that exist in a given country, and in some markets that may just be cash. In other markets, they may be very heavily check-orientated or card-orientated. Innovation needs to take account of that context and move the game forward and provide much greater convenience for consumers and for businesses alike, and probably better price points and get greater efficiency over time.
I wanted to move over to you just to mix it up a bit, since you come from the World Bank. David's giving a vendor perspective, but how does this, looking at different regions and different developing countries, how do you view payments innovation?
I think payments innovation, the definition, like David said, it's really quite wide-ranging, and I think there is many definitions as there are people around that look at innovation. But I just want to bring it on the perspective of the payments systems survey that we've done recently, I think the last 2 years, where we define payments innovation, particularly with regard to payment instruments. And we just labeled it as any instrument which is not traditional. By traditional, I mean payment cards, cash, checks, and so forth. So you're looking at issues like mobile payments, for example, that would classify as an innovative payment product.
What do you have for you?
For me, the payments innovation can be in the form of changes in institution, changes in instruments, or changes in processes. Building a new institution to bring about reforms is also an innovation, or bringing a new product that would serve the new customers, new segments is an innovation, or radically different processes are also innovations. Possibly when I get opportunity, I can share about innovations in India later.
So now, Ian, I wanted to end with you because you put this panel together. So what is payment innovation to you?
Well, I think it can be two things. It could be the vast amount of effort, an activity that goes into talking about what next and what is the next business opportunity, how do we help our customers, what's around the corner. Or you could look at it from the perspective of, well, what's actually going to be successful. So innovation really will be only remembered as those things that were successful from that first category.
I wanted to bring in the next two questions. I wanted to focus on this idea that there's payments innovation in the developed world, and there's payments innovation in the emerging world, and then there's payments innovation in the sort of non-developed or unbanked world. So what I really took away from the panel this morning was this idea that you should sort of utilize established payment infrastructures, like you mentioned, faster payments in the UK, but also a lot of companies really need to look at the unique needs of, say, not Africa, but Kenya. That there are local needs that you need to look at when you're looking at payments innovation. I think you mentioned the word holistic, looking at it from a holistic point of view. How can different regions take payments innovation that's happened in other countries, happened globally, and then twist it so it fits the local needs of the population?
I think from a development perspective, from the Payment Systems Development Group, we always encourage countries to look at a holistic approach. Of course, innovations are taking place all over. And the biggest mistake that one could ever make is to just take a solution or an innovative product that has worked somewhere, cut it and just paste it.
Right.
So we believe that the biggest really thrust in terms of moving, advancing in terms of development for payment systems is to look at what exactly do you want for your particular country. So if you go in, for example, into a country and you're advising, the starting point is to ask whether they've got a strategy. What is their strategy? What is their vision for payment systems development? And then innovation will always take place. Of course, you find that the developing countries are kind of like following behind in terms of innovation. And in so doing, it may necessarily be a bad thing or a good thing, depending on how you look at it. Because when you follow, you have got the late move advantage, so you avoid the pitfalls or mistakes that have been made by other countries. But we always encourage countries to look at a specific solution that suits the needs of the customers in that particular country. Because if you just take and paste, then I think you're headed for problems.
I know.
Let me come in there, actually.
Yeah,
I think Alice, that's a very good point. I do think, though, that there are enablers and infrastructure, what some people call the rails, that I think is eminently transferable between countries. But I think you're absolutely right. Each nation needs to build its own payment system for its own requirements and its own use cases on top of those rails. But I don't think there's any harm in necessarily sharing the infrastructure sometimes.
Absolutely. In fact, infrastructure has got to be shared. We actually encourage that because there's got to be cooperation. But unfortunately, in some situations, it's not possible for stakeholders to come together and share infrastructure because issues of, okay, I've put in so much, in laying out this infrastructure, they kick in and people are looking at maybe making the numbers. But if you can get to a point where you encourage stakeholders to share infrastructure, then cooperate on the rolling out of the products, then compete rather instead of cooperate, then I think it would actually get us somewhere.
Here in this connection, I would like to share in India some very interesting development. First development is the Reserve Bank, which is the central bank of the country, decided that Reserve Bank should focus only on regulation and supervision and leaving the operational part to specialized payments utility. So a national level utility, payments utility has been created called National Payments Corporation. This is, during the last 2.5 years, the utility has done phenomenal work. The second thing is the central bank thinking and the banks also thinking that there is a need for bringing competition in the card payments market. So building a domestic card payment network. Well, this is not an innovation, but this is to bring in competition is also a necessity to bring in innovations. The third thing that the banks have come together, banks, telcos, the mobile payment solution providers have a very unique way of cooperating with each other in building the interbank mobile payment service in India. And now 38 million customers have registered for this service. The transactions have started happening, about a few thousand transactions a day, and money transfer is possible from any bank account to any other bank account real time, 24 hours a day, and in a few seconds, in less than 10 seconds. So that is what is another innovations. And the fourth thing is what is the radical way of doing the financial inclusion and electronic benefit transfer. So the country, the governments, they noticed that there is a lot of leakage in the electronic benefit transfer. Rather, somebody is getting the money twice, or somebody is not getting. So leveraging the unique identification, biometric unique identification, maybe the money can be transferred and only the real person can withdraw cash. So that is also an initiative. So these 4 initiatives, developmental initiatives in India, I would also take it as big institutional reforms or innovations, as you can say, because the reforms and innovations go hand in hand. That is how I would like to.
That was, you mentioned cash. I mean, that was mentioned during the panel, that any innovation must be interoperable with cash. That's a interesting statement.
Well, I think for a lot of developing markets, the common exchangeable value and the thing that provides instant settlement is actually cash. And as electronic methods of payments enter into those markets, they need really to be interoperable with that cash network. Otherwise, people can't move money into them or move money out of them. And so, as Hota said, the importance of everybody having access through biometrics or some other form of access to cash coming out of ATMs, if ATMs are the electronic method of delivery, is extremely important for those markets.
I just want to touch on one interesting aspect, I think that was mentioned by Hota, the issue of the regulator versus innovation. I think there's been a lot of things that have been said about regulators maybe stifling innovation in some quarters.
Or constraining.
Okay, maybe constraining. So I don't necessarily believe that that is the case, because if you look at regulators, regulators worry about risk, right? In their search for financial stability, they need obviously to constrain risk. So when you put out regulations and laws and all that, you are actually using that to actually control the market, so that at least you are able to control the risk. Because if you cannot measure it, then you cannot control it. A situation where things are just opened up and it's free for all, then I think is not really desirable for any regulator. So when we deal with issues of regulation and innovation, I think that intricate linkage needs to be appreciated, particularly from the regulator's perspective.
Yeah. Does anyone want to add to that?
In fact, the regulations I feel regulations all over the world have been supporting, particularly in our part of the world, that in Asian part of the world, I know, I have the understanding, or I have the knowledge, the regulators have been promoting this innovative payment systems in a very big way, particularly the mobile payment systems they have been promoting. There is absolutely no constraint. I know the mobile payments forums in India, whatever they ask, the regulator gives just the double. They want the limit to be raised a particular amount, the regulator comes, they double the amount. Regulator has now opened up the telco accounts, wallet accounts and bank accounts can be interoperable. Money transfer is possible from telco account to bank account and bank account to telco account. So interoperability has also been permitted. But actually, in fact, in terms of mobile payments, I will say the regulation has taken the lead. In terms of other services also, electronification of the payments, the regulators is taking the lead. Regulator is pushing very fast. They are tightening, they are making check clearing costlier than electronic clearing, so that by tweaking the pricing of paper-based products, electronic products can be given a boost. For electronic payment, lot of workshops, seminars, symposia, the regulators coming and participating in many things are happening. So electronification is the way to really move forward.
I think to combine the points that David and Hota have made there, I see the regulator as needing to provide the system stability and consumer protection that we all think of, but also I think to foster an environment of success for innovation.
I think
for
it's very
inclusion.
easy to think of regulation as a blockage instead of maybe using it bankers
That's
using it
right.
to their advantage.
I think the regulator really needs to foster the environment, so they need to create convergence on standards across different payments mechanisms and instruments. I think they need to be a primary supporter of financial inclusion, of technology innovation, of equivalence between channels, in order to make everything more convenient for the consumer and more straightforward for the SME and the corporate. And I think there's a big role there, and I can see that regulators are moving in that direction. But it'd be great if they all moved in the same direction faster, and there was convergence even between regulators in different countries.
Yeah. Now I know regulation is the financial services favorite subject, and we could talk for an hour on this. So, but I really wanted to sort of stress for time. I wanted to end with the big sort of crystal ball question. I'm going to start with David. You know, we talked about payment innovation right at the moment, but where's this going in the next 5 years? You know, where are cards going? Where's mobile going? What do you think?
I think that for markets that are already fairly developed, the things that are driving innovation to take place are really that businesses and consumers are squeezed, so they're looking for things that are more cost effective, where money moves faster and liquidity is improved. They're also looking to move money internationally more easily, and I think that what we're going to see in the developed markets is a lot of requirements around immediate payments, faster payments, those kinds of things, and delivering then mobile access and other forms of access to those underlying transmission systems, so that anybody with a tool that sits in their hands like a mobile phone can really get access to their money and move it instantly across borders. For the developing markets, I think really what matters is the interoperability of existing structures, primarily cash structures, with the electronic methods, so that we can help the ordinary consumer actually get on to the first stage of electronic financial inclusions.
So, Ian, Accenture's bread and butter is because clients coming to you and saying, what's happening tomorrow? So what is happening tomorrow with payments?
Well, I think everything David said is a good reflection. I would add to that I think retailers and corporates need to be more vocal in what they need to enable their customers and their supply chains to be more efficient and effective. And whilst I think that it's important to look at financial inclusion and consumer requirements, actually I think much will be driven by those organisations that have cash to invest and who can have a senior level corporate to corporate relationship to make things happen.
Okay. So how does the World Bank sort of view where we're heading with payments?
I think based on the work that we have done in the 100 plus countries, we see the developing countries lagging behind a bit, particularly when you look at retail payments.
Yes.
So innovations, yes, but some of them are actually very ready to embrace these developments. But I think going forward for the next 4 to 5 years, I don't see a lot of infrastructural development, so to speak, but maybe consolidation in terms of what they've put in, maybe upgrades, and for those who haven't put in anything in terms of infrastructure, this is what they'll be focusing on. However, the financial inclusion agenda, I think, has actually obtained center stage because it has received attention even at the highest level, G20. So I see a lot
people
of pressure.
that aren't in banking are
Exactly.
interested in
yes,
that, yeah.
Absolutely. So I see a lot of pressure, I think, for countries to maybe look at the level out in the regulatory space in order to put more people on the banked sector as opposed to unbanked. Maybe more developments on the mobile payments front, because mobile payments, I think, are being seen as the conduit through which this financial inclusion will be achieved. However, having said that, I should not really forget the fact that most of these countries do have challenges, particularly on infrastructure. Just basic electricity is not available in some remote areas of some of these countries. So unless government steps in, maybe the governments step in to make sure that they address those issues, and also issues of awareness, education and awareness, and capacity building in the individual countries, then I think we might continue to have these challenges.
Yeah, I mean, I think India's got a very unique position because you have all three, developed, emerging, and undeveloped in one huge country. So
the way I see it is, so far as the micropayments are concerned, the future of payments is tap and go. There is no alternative to that. Payment would have to be as efficient and convenient as cash. So tap and go for the micropayments. And for other payments, repetitive payments like salary, pension, the investments and whole lot of things, the ACH type of payments with a faster speed, instead of T+1 or T+2, a T+0 kind of ACH system is the way for this kind of repetitive payments. For money transfer, real time is the way to go. Real time everybody wants, not only large corporates for the large value payments, but even the individuals want the real time money transfer. So real time money transfer, the mechanics should come. So gradually a lot of cooperation between the banks, between the payment system entities, between the telcos are likely to come. Mobile payments mobile as a channel will definitely emerge, but not the only ones. I believe that tap and go has to continue. The cards as a payment instrument would continue because it continues to be very efficient, unless a superior product like tap and go, which will be only for very low value payments, but medium value payments, cards should continue to be a very important thing. Checks would continue for quite some time. I don't see the end of checks in the next 5 to 6 years. But 2020, yes, even country like India, 2020 it is feasible. The way, the speed at which we are moving, end of check by 2020 is feasible for country like India.
But probably India before the UK. Well, I want to thank you all for taking time out of your morning. Thank you very much.